Hi, I'm Tom Lydon with ETF Trends here in Hollywood, Florida at the Inside ETF conference. You're here with Kevin Carter, who's the founder of EMQQ. Good to see you, Kevin.
Great to see you.
You did a great job on the stage up there. You had a
Thank you.
lot of great things to talk about, but share with some of our viewers your outlook for what advisors should be thinking about for 2018.
Well, as you know, I'm an emerging markets person, and emerging markets have been back in favor. Good year in 2017, and I suspect we'll have another good year in 2018. But the key with emerging markets is the consumer. That's where the growth is, and just as we, in the developed world, are shifting our consumption from big box retailers to smartphones, the same thing's happening there, and frankly, I'm quite confident it will be one of the greatest, the strongest growth sectors for 2018 in terms of revenue.
Yeah, so what we often don't understand, unless we're spending time in emerging markets, is you don't have big box retailers over in India or in most of the areas of China. Most of the consumption is done on the phone, right? That's
right. I mean, basically emerging markets are leapfrogging the way we consume. And if you think about it, there's a big deal happening. We take computers for granted. We've had desktop computers, laptop computers for 20 plus years. We take the internet for granted. We've had the internet with high-speed cable to our houses and offices for a long time. Smartphones are basically the first computer for 85% of the world. They're just now getting them, and they're getting internet access for the first time on that smartphone via broadband mobile. So the same things we see here with Amazon, with Netflix, the same story, but because the traditional big box retail and other traditional consumption wasn't available, the growth is even that much greater.
So just skipping over cable, computers, it's going right from cell phone to ordering online.
That's right. As somebody said last month in an article I read, you have 1 billion people in China that are walking around with a shopping mall in their pocket.
All right, so what EMQQ does is in fact focus in on that great growth opportunity in the form of different types of companies. So give us a couple examples.
Well, of course you have the big Chinese companies, Alibaba and Tencent, but people aren't maybe familiar with some of the smaller Chinese companies. Wuba, 58.com, trades on the New York Stock Exchange. That's the Craigslist of China. Fantastic business, very profitable, growing fast. But it's not just China. It's spreading. You have companies in India like Make My Trip, which is sort of the Expedia of India. In South America and Central America, you have Mercado Libre, trades on the NASDAQ. This is sort of the Amazon and PayPal of all of Central and South America, partially owned by eBay. And then finally in Eastern Europe, in Russia, you have Yandex, which is both the Google and the Uber of Russia. So the same kind of businesses we're familiar with, started by local entrepreneurs, usually backed by US venture investors, so you get good governance, they list in the United States, and I really believe it is the best slice of emerging markets and almost certainly the best growth story in terms of revenue growth that's ever happened in public markets.
Well, when you look at all the growth in emerging markets, it's consumption, and it's a way to kind of lasso those companies that are taking full advantage of that, for sure. We're obviously, I'm a huge Amazon fan, I love Amazon, but some of these companies you're talking about have growth rates that are unbelievable compared to Amazon, right?
Well, the entire sector is growing at 40%, right? And it's averaged 40% over the last 7 years. That's where I say I don't believe that's ever happened, where you had a whole sector of publicly traded companies that you could put into an ETF or an index that's grown that fast. And I'm about 99.9% sure. Maybe there was something happened with auto parts manufacturers in the 20s or something like that, but I don't think so. And it's accelerating. I mean, Alibaba and Tencent are two of the largest companies in the world, right? A year ago, they were reporting 40% growth. In the last quarter, they reported 60% plus growth. So these are almost $500 billion companies, and their revenues are growing at 60% presently.
Just unbelievable. Yeah. Well, listen, appreciate getting time with you, Kevin.
Yeah,
congratulations on all the success.
Thank you.
Thanks.